Good evening. This is Ken Long from Tortoise Capital Management. I want to do a quick run through of a daily report for October 11th to prepare for tomorrow's trade, October 12th. What I have on the left-hand side of the screen is the daily report, and on the right-hand side, a little note sheet we put together at our last seminar. I've already pre-filled out some of this so you can see where I'm going. Page 1, I'm looking very first thing that we're in bull quiet. That's good. Annually, we're at 61 out of 100, and that's neutral on a long-term basis. 94 is slightly overbought. I look next to my 10-day max pain. I'm very interested to trade AXP, American Express. That's the finance sector. Hewlett-Packard and Intel, technology, and then Bank of America, also the finance sector. So the max pain are things that I like. In the ETF 100, I'm looking at oil as an interesting rebound from pain. In the gap stats, what I'm looking for on the last 30 days, I noticed that gap up and reverse has occurred 6 times for 20%, and gap up and then continued to go higher 40%. So I'm seeing a short-term pattern here that 2 out of 3 times when it gaps up there's been a follow-through, and the follow-through when it goes higher has been 0.69%, and the fail has been only 0.52. So that starting to emerge as a short-term pattern in this strong market. I note the standard deviation of SPY's gap is 0.72. When you add that to the average, an upside gap of 0.75 or downside gap of 0.7 would be within the realm of normal and tells us it's going to be about an average day. Gaps larger than that are of a concern to me. I notice that the average intraday range of SPY is 1.5%, and plus 1 standard deviation 2.5%. So that's the kind of normal moves we could expect to see in SPY if we get average volatility. See, the 10-day index looks at the last 10 days overbought, oversold. Because we're above the red line, you see again that we're overbought. So that means we're going to be cautious about initiating new positions. We're going to be sure that we preserve profits that we do have in hand. And anything that breaks out, however, is a potential runaway freight train here in a bull market close to the top of that channel. The 94 that you see here is the same as the 94 you see there. Quick look at the overreaction and channeling systems. Didn't fire at all. I'm noting my pivot point for tomorrow in SPY is 116.62 with a range up to 117.7 and down to 1.556. That's a relatively tight range. It's because we had a very tight trading range today, so the pivot point ranges are very, very small. The SPY's volatility still at the low end of normal or at the high end of quiet. ADX 23.5 with green on top of red, meaning that we've had a slowly improving bullish trend. Still some room to go. I note that in the pattern trades, a correction in my mosaics, I still see that we are green and bullish in the price relative to the 200-day moving average. Green says that 4.82% above the 200-day moving average is relatively strong. The slope of the 50 is getting better, and it's also green. That's good. In our patterns, VXX, the VIX ETF, is on a 5-day down pattern. In 551W, we see TLT. And then among the large caps, the 551, there's a EMC as a tech, AT&T, Kraft, Conagra. Conagra is interesting. We're going to see later that DBA, the agricultural ETF, which has been strong, was in a max pain from today. So a follow-through or reversal in CAG could be very interesting. And the stealth trades, financials have been getting relatively better. Even though they have been beaten down, there has been some significant improvement. So I'm going to be looking for the logic train in finance, which takes us from XLF to JP Morgan, American Express, and Bank of America. I especially like JP Morgan here. We're going to see that today, even though finance was relatively weak. JP Morgan was a % leader in the Dow. And so if we see strength in financials, wouldn't surprise me to see JP Morgan to be the leader rather than AXP. In page 2, the Dow and ETF tactical reports. Again, what I'm looking for first on the Dow side are the max pains And then you can see AXP has been horrible, down over 13% in the last 10 days. You can see this column of green here from the 10-day index. These are all the ones that are highly overbought. That's where all the strength is right now. IBM, Boeing, those are candidates for continuation follow-throughs. And here, again, JP Morgan, that's the interesting one. Finance has been a lagging sector, but they were a strength leader today. So that's one that's going to bear watching. Over on the ETF side, see a lot of things in the green, overbought. Only natural gas is really dragging us way down. Natural gas and oil, so the whole energy complex was weak today and have been consistently weak. And again, DBA was horrible today. That's the agricultural commodity. And so if we saw a turnaround in that, a reversal, I would be looking at Conagra CAG as a very interesting play. In a summary of the tactical patterns for the Dow, I like to look for the symbols that are dojis, and I see that Intel and HPQ, Hewlett-Packard, are both in a doji condition, and that makes it easy for us to play breakouts into the green zone on those two. So they're on my short list. I see that AT&T was on a 551W. That makes it interesting and easy to frame. Max Payne range compression candidates. The very best one is American Express. You can see how horrible it's been. The highlights in red. Conversely, you can see how strong Alcoa has been consistently, as has been Boeing. So if you wanted to play continuation of momentum, Boeing and Alcoa are easy candidates to see. And if you want to play continuation of the fail, Bank of America and AXP are both possibles. But again, their extreme conditions have been leading to weakness in financials. So if we see financials reverse, it's not unusual to see the really horrible ones bounce the highest the next day. So the finance logic chain is going to be very interesting tomorrow. Over into the ETFs, the two dojis we have are in the defensive sectors of consumer staples, XLP, and S&P Utilities, XLU. Those are the only dojis. We had a 551 in long-term treasuries. You can see down here how powerful silver has been, although gold started nosing ahead of it. Silver has been outperforming gold consistently. Coal has been the other dominant pattern. So if we see strength in energy and strength in coal, I'm also going to look at MEE as a continuation of the washout. MEE has been a fantastic trade for us ever since it fired successfully on the washout. So I'm looking for continuations in that sector. We can see the 30-day regression line slope here is very powerful. That's as strong a trend as you could want to see. The last couple days have been dojis with very small daily ranges. There's a concern now in my mind that after this nice long run, the slope is starting to flatten out a little bit and has just crossed over its 10-day moving average. And so I am cautious here rather than wildly optimistic. I acknowledge it could go higher from here, but we've had an extraordinary run already of 2.5 standard deviations in the last 3 months. So that's been quite a move. A pullback here would not be surprising at all. In the quality report, again, you can see JP Morgan was a winner today. On the 60-day quality, it was red. 30-day quality, it was yellow. And then today was a % winner. That looks to me like a bottom-feeding candidate in finance, and why I'm very interested in that. IBM technology, a little too pricey for me to own it, but its improvement from minus 1.69 quality on 31 to 60 compared to the 4.44 has made it a real turnaround candidate, and that may be a candidate for additional momentum. Verizon looks very interesting to me too. It's in green in quality for the last 1 month and 2 months, and was a strength winner, and at 33% or $33 you can buy a lot of that. So that's a potential candidate for momentum. Inside the ETF quality, you can see DBA has been strong, green, but now is starting to get weaker, and so maybe that weakness from today was just a continuation of the trend rolling over. You can see how miserable natural gas and oil have been. Coal, on the other hand, has been extraordinary. It's been moving from yellow into white into green, and that was a strength winner today. So again, KOL and MEE are strong candidates. And that's everything I want to talk about on the daily. You can see the notes here and deconstruct that for yourself. So We'll see you in the chat room tomorrow. Thanks a lot and good trading.